Welcome back, everyone. We have a quick midweek update for you today. And since this is going to be a shorter episode, we decided that we would try out our 1080p format as per request so you can see every pore, every wrinkle, and hopefully not my mustache Tom. And that's a 30 Rock reference if you don't know it. So, anyways, Nick, what are we talking about? What are our updates?
This is more than month old news item. Probably not a news item, maybe more like a rumor about Nvidia that we wanted to address and talk about what we think Nvidia's plan is over the next 2 years and the long game that they're playing and what that means for those of you that may be shareholders. And then a quick update on some Aehr Test Systems news the other day.
So, the first thing let's talk about is why it makes sense for NVIDIA to quote unquote stuff the channel with generative AI servers for the next 2 years and then endure a crash. Nick, explain what stuffing the channel is and explain why this makes sense for NVIDIA.
Okay, so this term channel stuffing came up as part of this conspiracy theory, I guess you could call it, on Twitter. It essentially looks like, someone on Twitter bet against Nvidia. They shorted the stock, they've lost money, and they've kind of made this very spurious claim that Nvidia is a scam. Nvidia and BlackRock made that investment in CoreWeave, and the claim is that CoreWeave is actually a controlled Nvidia entity. And it's like this shell corporation, I guess the argument is, that NVIDIA controls, and it's just an outlet for them to sell a bunch of GPUs to. So channel stuffing, selling a bunch of your product in as many places as possible, and the claim that some of these are, not actual legitimate businesses, but that's not the case. Casey, what exactly is CoreWeave? Because this is not entirely different from another company that we did cover a couple months ago that we do think is maybe, kind of a dubious investment.
Yeah, CoreWeave is a private company that provides cloud infrastructure for AI training. This kind of reminds us of the company Applied Digital, which originally was a crypto mining company. And then when crypto kind of took its turn, they shifted to a cloud infrastructure business.
And CoreWeave, a similar story here, started out as crypto mining infrastructure because GPUs are used for that as well. And then, made this pivot more recently to AI training. And granted, Casey, NVIDIA did invest money in CoreWeave, but NVIDIA has been investing in pretty much every AI unicorn out there in existence right now. It seems they've made a lot of investments into AI companies, and especially those that are customers or potential customers that might buy some of their AI servers. It makes sense that they would want to do this because selling GPUs is still what NVIDIA does to make money.
And channel stuffing does make sense because we're talking about enterprise upgrade cycle. And we mentioned this in a recent Broadcom video. We referenced what CEO Hock Tan said about this cycle. Enterprise business is a more stable market because infrastructure has to be updated every 4 to 5 years. And so if NVIDIA can install their system in as many data centers as possible right now, who's going to be re-architecting, ripping out, and replacing NVIDIA infrastructure in 4 to 5 years?
Exactly, Casey. It's a very sticky installed base. And so Jensen Huang and company are playing the long game here. If they can command as much of the AI data center market as they can right now, they're looking at this upgrade cycle, this stable revenue and income for potentially decades to come if they can gobble up that market share right now. Again, like you said, every 4 to 5 years, infrastructure installed today needs to be updated. And then everything installed next year, 4 to 5 years, needs updated. And what's the rationale for updating it? Well, infrastructure, GPUs, servers, it's a physical asset. All physical assets wear out and eventually need replaced. In addition to that, NVIDIA has said multiple times now, but especially this was highlighted in the last earnings call, They're using AI themselves to rapidly accelerate development of their semiconductors. Every 6 months, they said that we're going to get like a new product release. So again, channel stuffing makes sense here. If you think about that installed base, how sticky it is, and the many, many, many years of sales that can result if they stuff the channel, so to speak, right now. We have an example that illustrates this, don't we?
Just look at Intel. Earlier this year, CEO Pat Gelsinger had said that it still owned 95% of installed CPU base in global data centers. Yes, 95%, even after all those AMD market share gains the last few years. Market shares of chips currently being shipped doesn't equate to old infrastructure getting ripped out and replaced. It equates to eating up of new demand. So Intel still has a lot of future revenue.
Yeah, not a lot of future revenue growth necessarily, because that data center segment for Intel flatlined, but stable revenue. So, in other words, Nvidia is playing the long game here. Again, just to reiterate, it wants to command as much of the GPU market as it can right now because it can mean potentially decades of replacement and upgrade GPU sales. So, I think this helps explain some of the, I think, this mind bogglingly dull Nvidia is a scam conspiracy theories that are out there on X, Twitter, related to the CoreWeave investment that Nvidia made. And as far as collateralizing those GPUs, collateralizing the debt using the GPUs that were just sold by BlackRock, this is just smart financing from BlackRock. A lot going on here, but Nvidia is not a scam. Okay. We can definitely poke holes in rationale for buying Nvidia stock right now. Absolutely, hands down, that can have holes poked through it all day. But Nvidia is not a scam.
NVIDIA is definitely not a scam. Nick, could you give us an update on some Aehr Test System news that came out earlier this week?
Okay, Casey. Yeah, so Aehr Test Systems. So this is a silicon carbide company, a play on electric vehicles, on the rapid expansion of electric vehicles, silicon carbide chips. Of course, a nice proxy for investing in EVs. So this company's gotten the habit of at least once a quarter dropping a press release about a customer order, or in this case, a new customer order for its silicon carbide wafer test and burn-in systems. So these are the systems that test not just for the integrity of the silicon carbide wafer, but also burn-in. That's where this basically the silicon carbide wafer is aged so that any premature failure doesn't occur once it's installed in the car, because that can be very costly or in some cases even a safety risk. So you want to make sure that you weed out any of the bad chips before they move on to getting installed in the vehicle itself. Long story short, though, here, Aehr said it received an order from a new customer, which it actually said it was working and anticipating a new customer sale during its last earnings call. This is not really new news, but it's selling one Fox MP wafer level test and burn in system, multiple wafer pack contactors. Those are basically a big probe card that makes contact with the wafer and runs the electric current through it for testing. And then a wafer pack aligner used in engineering and qualification of silicon carbide wafers. It said this new customer is a US based multi-billion dollar semiconductor supplier serving automotive, computing, consumer, energy, and so forth. So here's what we know about Aehr Test Systems. Its first and by far largest silicon carbide customer is on semiconductor. That doesn't leave a lot of US based silicon carbide manufacturers left. Most US based manufacturers are not dabbling in silicon carbide yet. We have Microchip, but Microchip is not making the wafers themselves. They're involved in packaging the chips that get cut out of the wafers, packaging them up into devices. Same goes for Qorvo, ticker symbol QRVO, a company that we have not covered on this channel yet, but we have something in the works on them. They actually bought a silicon carbide company a couple of years ago, but they're also making silicon carbide devices. They're getting wafers from SK Siltron, which is based in South Korea. So basically leaves Wolfspeed as the customer. Interestingly enough, Wolfspeed has been billing itself as a leader in silicon carbide, has all of these new fabs that are opening up and ramping up production or still under construction, but up to this point had not been an Aehr Test Systems customer. And so now, from what this sounds like, Wolfspeed has moved from engaging with Aehr Test Systems to actually becoming a purchaser of this equipment, because Wolfspeed is actually involved with the manufacture of silicon carbide wafers, not just the die pack tester. If Wolfspeed had said this was a die pack sale, maybe that could be a different company, but because it's a wafer pack testing system, it probably means this is Wolfspeed. The big question here, does this change what we think about Aehr Test? The simple answer is no. We didn't see any new news here. As I've mentioned before, KC Aehr Test Systems is in a league all by itself as far as valuation goes. At this point, the stock is at 48, 49 bucks a share, which means it's trading for over 90 times trailing 12-month earnings and maybe 40 to 50 times full year fiscal 2024 earnings. This is a very, very expensive stock for what is highly likely to be a cyclical business, we think, within the next 2 years. We made our money on Aehr Test Systems. Stock doubled twice from the time we bought it last October. We're now out. We like the company, super promising company. We still follow it. We're interested in buying it again at some point, but not at this valuation, not when it's being hyped like this. So we're still on hold. We think a fair value on Aehr Test Systems currently at this particular stage is still less than 40 bucks a share. But that's just our take, to each their own.
Make sure you hit the subscribe button and don't miss a video. We have an energy episode coming up later this week with a much requested stock in phase, as well as some updates for Albemarle and some discussion about Berkshire Hathaway's energy sector. We'll see you all again soon at Chip Stock Investor.